All right, so I said I would come back and let you know what happens a day after the Fed cut. The reason I wait a day is because the markets always have their reaction. And typically a day later, when the dust settles, we can get an idea of the impact, at least of this first cut, which was a half a point, 0.5%, 50 basis points. Those are the terms you're going to hear. But for most of us, the Fed cut short-term rates a half a point. And let me break it down for you. I'll give you a quick summary. My name's Jeff Garber. I'm a mortgage loan advisor. And I wanted to bring you this follow-up based on the video I made before the cut, letting you know what might happen and why. So, number one, mortgage rates did not come down a half a point. They were not cut a half a point. The Fed cut what are called short-term rates, which are not long-term rates. They cut short-term rates a half a point. Short-term rates are things that like variable rate credit cards, home equity loans, student loans, car loans, things like that could come down, which is all good news. But mortgage rates, actually, ultimately, no change. What you're looking at here is a chart showing mortgage-backed securities or bonds that trade in the bond market. This is where mortgage rates come from. As these bonds go higher in price, rate goes down. So all of this uptrend was good for mortgage rates. Right here, day before the Fed cut, rates were here. Fed cut, we actually went up a little bit in rate because, as I said, when we go down in price, rate goes up. And then today, you can see it got a little worse. And then as the day went on, we started gaining it back. And so at the end of the day, we're really right around the exact same area we were before the Fed cut. So no real impact on mortgage rates, the day of or the day after. All right, that, of course, could change as more of this sinks in. The trend is definitely our friend. We should consider still consider rates to be in a downward trend. We're going to have our pockets where they go up a little bit because nothing goes in a straight line in one direction. But that's what happened. So what's that going to do for housing? Basically the word on the street is mortgage rates fell a half a point. That's what the media is saying. That's what many people believe. So the action in housing are going to be derived off of what people think actually happened, not what actually did happen. And so we're going to see more buyers coming into the market to get pre-approved as their hearing rates are coming down. And that means there's going to be more offers coming in on the already low inventory that we have. And that in turn is going to continue to keep the current situation in housing the way it is, where housing prices will probably continue to rise because there's more demand than there is supply, basic economics. So we expect to continue to see that. We do expect 2 more Fed cuts this year. We have 1 cut right after the election and 1 cut in December. As of now, it's predicted to be 0.25% cuts, so we could get another 0.5% by the end of the year, making it 1 full point that we're down. That's good. And then if you're looking into 2025, they're predicting for the year maybe another full point to maybe 1.25 points. And again, that's what we know right now. That's based off of the economy. The reason why this cut happened was because inflation is getting closer to the Fed's target rate. It's come down significantly. And since unemployment went up and the jobs market started creating less jobs, the Fed started to cut rates to get ahead of that and prevent recession. And so that's why they went with the bigger cut right off the bat. We might see 2 smaller cuts, but at least we're in that cutting cycle. That's what we want to see. Stock market doing very well. Record high for the Dow as of the time of this video. So the stock market likes it. That's where we're at. Hope you enjoyed this video. I'll keep you up to date on the rate cuts and what mortgage rates are doing as well. Take care.